Hello and welcome to the weekly ADM YouTube video. My name's Freddie Humfrey. Thank you very much for joining us today. So the last week's been very much personified by a pullback in the recent downtrend and then a re-entry into this downtrend that we've been in over the last 2 to 3 months. From a recent news perspective, the main news over this last weekend was really from a European perspective about both Polish and Hungarian governments attempting to limit or even stop Ukrainian grain imports into those countries following farmer complaints of local markets being underpriced as a result of this import of cheap Ukrainian grain. The EU Commission took a pretty dim view of this and put a stop to it quickly on Saturday evening, stating that it is not up to individual member states to define trade policies. Meanwhile, in the US, we continue to see challenges, particularly on the hard red winter wheat quality. And in fact, we're seeing record premiums against Chicago Board of Trade when it comes to the Kansas City board. That window continues to be a challenge. We see crop ratings at an all-time low, particularly in those key areas of hard red winter, and continues to be a real area of concern from a global wheat perspective. However, it's not the only challenge that we continue to face. Russia continues to saber rattle regarding any further extension to the grain corridor. As many of you will remember, the last extension was only for 60 days rather than the original hoped for 120 days. And that leaves us with an extension to the end of May for the current grain corridor agreement. Obviously, this brings significant challenges from a geopolitical situation. If Russia is to genuinely step away from that agreement, what happens to Russian grain exports? What happens to Ukrainian grain exports? And as a result, we are seeing some add in some risk premium against that potential. We have seen this situation before, albeit not in the same structure, because the previous grain corridors were 120 days rather than the current 60. But it is a concern that the market is trying to really understand and build into pricing structure. I think quite interestingly, when you look away from the US and from an S&D perspective, and also Russia from a Ukrainian grain corridors perspective, and the obvious geopolitics surrounding it, there are actually pretty limited problems in terms of wheat around the world. We saw corn undercutting wheat in East Asia quite significantly, by up to $15 a ton in some places. And meanwhile, certainly in some of the large growing regions such as the EU, there are starting to be rumours and discussions about forecasts for yield being increased, having had a pretty benign early spring window. And in fact, France Agrimaire increased their winter wheat crop ratings in France by 1% week on week to 94% good to excellent. Meanwhile, their winter barley is at 92% good to excellent. So that winter wheat in France in particular looking very, very well. And we would probably reiterate that in the UK. The crop could do with some sunshine and some warmth, which it's forecast to receive over the next couple of days. But really at this stage looking very, very well indeed. And so we're optimistic for yields over here in the UK, as well as some of our cousins on the continent. From a UK perspective, we continue to be bumped around in the middle ground, not export competitive in any great shape on the old crop, and meanwhile on the new crop we're actively out on export markets. So whilst the domestic market from a demand and consumption point of view is very, very slow, whether it be feed or food, on the wheat side of things, the new crop, we are a long way away from exports, and certainly this weakening sterling has moved us and helped us a little bit, but nothing significant. And with a potentially good crop, as we've just touched on in the ground coming forward, that really needs to change. So we are looking forward to the UK to build in some price export competitiveness at some point, not between now and the new harvest in late July, early August. So from a fundamental perspective, it's a market on a week or so of ups and downs, some different impacts from geopolitics, and also US markets driving their own boat. And meanwhile, here in the UK, we've been buffeted around by that, and also the FX rates, which continues to create a challenge. I think from a technical side of things and just getting up the NOV London NOV 23 daily chart on the screen in front of you there, I think it's really important that we recognise a couple of key points. As we can see, this area of support that we got back from the 23rd and the 22nd of March between the 205 and 207 level, we struggled to break that in trading on Friday, and in fact bounced away with a bullish engulfing. We are still in this longer term Andrews pitchfork, albeit we're testing that today. And as always with these technical things, I think trend is your friend is probably the best way of looking at it until we break that trend. So currently still see this Andrews pitchfork here working away nicely, but really need to see a break of that 205 support level. Until we get that 205 break, then we remain in this sideways chop that we've just seen over the last week and a half to 2 weeks. From an overhead resistance and underlying support perspective, you can see on the screen there 217 back from the late January low that we've got circled in, and then the 226 again, this sort of shelf support where you can see multiple touches through the last year and a half are the overhead resistances, and then underlying supporters I've already touched on 205, and then in the mid to high 190s after that. So a market that feels a little bit range bound at the moment, is trying to move lower on S&Ds, but US wheat and some geopolitics really challenging that. Hopefully that's been a useful roundup of how we're seeing the markets at the moment and from a UK perspective. And as always, if you've got any comments or questions, please do put them through to the email, and we'll get back to you as soon as possible. Thank you very much for your time, and I hope you have a fantastic week. Cheers. Bye.